could just quickly, Mr. Hanlon, I think you indicated you would support a carbon tax. Is that right?
Some kind of price on carbon emissions.
Is that so we would have a cleaner environment, less carbon emissions?
Yes.
Okay. And you would admit that if you tax carbon, you get less of it. Less carbon emission, right?
Sure.
And we tax cigarettes as well because we want people to smoke less too, right?
Mm-hmm.
And though if we extend this argument out, if you tax income, if you tax capital, you will get less of that as well, right?
I mean, I see where you're going. I mean, certainly.
Why does it work for carbon and it doesn't apply to every other principle we've talked about today?
Well, it does apply, but you need to look at, for example, we've talked about savings a lot, but we need to look at our national savings rate. And when we
I think the point is when we
debt,
talk about taxes, I think you made the exact point. You tax carbon because you want less of it. You want to tax income, you want to tax capital, and you are going to get less of it. And if you look at the issues in this in the country today, it's an issue about the economy and jobs. We want to see investment in America. We want to see expansion in America, which will, in the end, lead to economic growth and job creation. But here you sit here and advocate for greater taxes, and we will get less of that when we increase taxes. And that's my concern with the two of your positions, Mr. Stone and Mr. Hanlon. And I know that you guys have probably followed what we've done in the House. We've tried to, in our budget, reform or make a proposal for tax reform, where we're going to take the top rate from 35 to 25% and do away with quite a few of the loopholes, make it fair, flatter, simpler, not quite where Mr. Master Marco is with a fair tax, but we're going in that direction. Would you all agree that that's a better system? Was anyone opposed to what we were trying to do in our budget with tax reform?
Sure, I'll be the devil's advocate here.
I thought you would be.
Which is that we talk about the problems with marginal tax rates affecting activities that we value. There are also government activities that only government can do, defense, some kinds of infrastructure. There's a size of government that we need. And the problem that we have with most of the proposals in the House is that they just set the level way too low of the revenue that they're trying to raise relative to what's realistic in our political system, what's realistic in terms of our aging population and our needs. And so the principle's fine. It's just that the level of spending and revenue doesn't seem as though it'll work.
Mr. Henton?
If you get the tax base right, you're going to get some added growth. Then the needs may go down. If you get the tax base right, people will see the full cost of government instead of having it hidden here and there.
Right.
And they might not want as much government. You don't know what you need until you get things right.
Right.
So that needs to be done. Second, the burden tables that people talk about, this tax falls on this person, this tax falls on that person. If the tax is changing the size of the economy and the level of wages, it's bound to be shifted to the middle class, because if you do something that depresses wages, they're going to be hurt even if it's not on the burden table. The burden tables are nonsense. They don't take the effect on the economy into account.
Right.
The tax expenditure list. In the late Bush administration, right up through the 2009 budget, they had a chapter on tax expenditures. That's required. But in those years, they put in the tax expenditures as they would appear under the so-called broad-based income tax, and another set of tax expenditures as they would appear under a neutral tax system. And most of the major tax expenditures simply vanish because under a neutral tax system, they're not tax expenditures, they're the right treatment. All pension plans under a consumed income tax, where you put down your income, subtract your saving, and pay tax on what's left, and when you withdraw from a pension, you add it to your income. That's the norm. That's a big tax expenditure under the income tax. It goes away under the consumption base. You go down through all the major tax expenditures, even in the housing sector, in the consumption side of, in the consumption tax plan. OMB got that one wrong. They messed that up. Even that one is treated correctly under a consumption tax base. When you look at tax expenditures as they are commonly presented, you get a bad idea for tax reform because you're going to start raising taxes on capital. Capital responds more to taxes than labor. I'm not an advocate of higher tax rates. If I had to choose one thing in the Bush plan to let go, I would say let the two top rates go up. They hit CEOs, they hit high-paid attorneys, they hit high-paid athletes, they hit entertainers, and they also hit some entrepreneurs. But give the entrepreneurs expensing and exchange on a permanent basis and they'll be held harmless. If you want a lot of revenue, you are going to have to tax middle-class workers. But if you tax them on consumption instead of income, at least they'll be free to save and invest and try and get out from under it and have a decent retirement. Watch your base. That's more important than almost anything else.
And it's fair to say that's why we went from not just millionaires and billionaires, as the president talked about. He actually went to those who make $200,000 to $250,000 because that's where the money's at. The lower you go, the more people you hit.
Yes, but you won't just hit them. There'll be less capital formation, and everybody will have a lower wage, including all the way down the income scale.
Absolutely, and I yield back, but I appreciate the panel coming in. I think it's a great discussion, seeing a couple different sides of you, and everyone sitting nicely and engaging. I appreciate you guys. Holding hands, yes.
Well, I want to follow up on